Guys, good morning. December 2nd, 2019, Monday. We have multiple things pointing to a reversal in the market, so this is not a week that you should be trading lightly. Actually, focus. This is the time to make some money. Guys, some good news actually coming out of China, which are actually bad news, but the market is officially in the green pre-market, thinking that all of a sudden good news from China are actually good. I'm going to show you in this video why they're actually bad, and that is an extra reason why we're super bearish on the Chinese stocks. We think they're at the top and they're about to tank. Those are our top trades for the day. We're shorting the hell out of Chinese stocks. Some of the observations are going to be crucial this week, and we should focus very much on the auto sales numbers tomorrow on Tuesday, and of course the Friday job report. Everybody's going to be paying very close attention to those things this week. They could be catalysts which could propel the market to some large intraday drops, specifically on those 2 days. Now, with that said, Black Friday is not going to be as hot as everybody's expected once they're actually going to divide the numbers down and break them down, okay? It's not going to be a favorable catalyst for the retailers. Therefore, we're still short Amazon and some of the other retail stocks. Number 3, we're continuously getting a confirmation on the VIX divergence. Again, pre-market today, guess what? Yes, the market is in the green, but so as VIX, and actually, at the moment I'm recording this, VIX is actually breaking above 13. That is a critical and important level. If this type of momentum continues in the VIX, guys, it's destined to break above 14, 15 level at some point in this week. Now, Mr. Tariff Man is back in action. That certainly can be good. This time, he's putting extra steel tariffs on Brazil and Argentina. At the same time, all this stuff is about to unravel about the actions in Hong Kong. So not a whole rosy scenario going into this week, guys. We want to own puts, and we don't want to day trade these puts because this bad news, okay, are going to continue throughout the week. There's going to be a ton of headlines. The market has reached its peak of positive news. There's very minimum to the positive upside right here. Therefore, it makes sense to not wait. We want to short the market at the open. With that said, we also don't want to just jump all in with crazy huge positions right off the bat. Understand that these market top, it could last for another day or two. In other words, yes, there is a high probability of a drop today, but it could stall out, and the real drop may not actually happen till tomorrow or Wednesday or Thursday. But overall, the market will be working its way lower. Therefore, start buying the puts in the morning, start adding to the puts around 10:15, add some more before the close as the market progresses throughout the day. So with that said, Amazon, Workday, CRM, BABA, NTSN, SPY, all puts, guys. We're not taking any calls this week. So Chinese manufacturing PMI above 50 is actually indicating economic expansion. But the question is, if this economic expansion is not coming due to an increase of business that China is doing with the United States, then how is this possible, right? The whole trade war is based on the idea that China needs the United States more than the United States need China. Well, apparently, okay, China is doing pretty good. If these numbers are real, okay, there's actually less pressure for China to make a trade deal now. And that is exactly what nobody seems to be paying attention to this morning. They're so excited that, hey, we're not maybe in a global economic crash, slowdown, recession. They're so excited about these numbers, they're actually not going through and breaking them down the way we're doing right now. The most important thing is to understand, if this is a real number, that means China is highly successful at making business partnerships, okay, instead of United States, with other countries. So when you put this whole picture together like this, what it really means is there is no trade deal on the horizon. And the market has already priced this trade deal in. If there is no trade deal and more people come into a realization there's no trade deal, period, they can't even agree on freaking beans, then the market will readjust its valuations from here. So here's another way to look at the Chinese PMI. Another way to look at it, guys, yes, if the numbers are real, okay, that puts really the urgency out of the equation for the China to make the deal. But from the chart perspective, last time we got to the same reading within the last 3 years, analyzing the recent chart history of Chinese manufacturing PMI. We actually didn't stay there very long. As a matter of fact, after that, it just been continuous downtrend until we hit a low right here. And since then, we've rebounded. So what it really means as far as the chart concerned, this could indicate a peak in Chinese manufacturing PMI. So from here, we could be sliding lower and we could be seeing some negative headlines coming in about Chinese manufacturing PMI over the course of the next few months. So question of the day is this. If the numbers from China are this good, then why on earth are Chinese stocks not moving higher pre-market? See, if you analyze the historic correlation between the good numbers that are coming over the weekend from China and you compare them to how Chinese stocks that are trading here in the United States are acting, typically these things, they're up. They're up 2, 3, 4. Sometimes I've seen them up 5 to 10%. When we get some crazy good news like that from China. Well, in this instance, no, nothing is moving. Nothing is happening. So if the positive news are really supposed to be interpreted as positive news in this particular case, okay, we're getting exact same opposite reaction. In other words, we got a classic divergence, and divergence creates opportunity. This is why our first trade of the day is BABA. We're buying 195, 197.5 puts. If you analyze the 3-day, 5-minute chart, which is exactly what we got right here, guys, head and shoulder, beautiful head and shoulder. We actually send out the alert to start buying some of these BABA puts on Friday before the close, when it was trading around here 199 area. So it hasn't dropped much, so the opportunity is still very much there, guys. We're targeting about 5 to 10 drop in BABA this week. If you take a look at the longer time frame chart, clear triple top, forming very near close. Pretty much everybody wanted to buy the stock already done so we're not expecting a huge influx of buyers at these levels. If you take a closer look at the daily chart, it is the freaking top, and that's why we want to strike now. We want to short the top, because from here, a small size pullback is likely for sure, but we may be getting actually a bigger size pullback to the magnitude of 10 bucks. 10 bucks dropping this stock, guys, could easily produce 500-600% returns depending on what these options are going to be priced when the market opens. Now, move 11 pre-market today in December 2nd still gives us clear pictures of these move 11 formations. Now, I know we've been talking a lot about these and you're thinking, okay, one of these move 11s actually going to really point to a drop, and I'm going to show you over the course of this video that we are getting to that pivotal moment of move 11. So this is some other picture I presented in the last video. November 11th, we're getting these move 11s pre-market. Just seems to be a very, very identifiable trend right now. We've talked about the Thanksgiving overshoot, where the market slightly moves above that 2150 level, above our magic number of 3131. That 3131 will be a magnet number. The markets are going to be drawn to it today, guys. But what we're looking is for actually markets to break that 3131 level at some point today by tomorrow. Ideal case scenario would be for today, December 2nd, for this number of 3111 to be revisited. If not, we think that number of 3111 will actually be a reality by tomorrow, December the 3rd. So very well defined triple 11. So we'll keep looking and keep noticing this top formation. Now we got 3 of them highly identifiable. We don't have to break the daily chart down. I mean, we just glance at this 5-day chart, guys. This is a very interesting type of top information. And if we look at other instances over the course of the last few years, analyzing these 5-day 13 market moves, guys, it typically leads to this. Now, can we get another maybe day of sideways traction? Maybe another a little pop higher here? Sure. But overall, I think the market is ready to rock and roll lower from here. Notably, we did have our target right before the market closed. We said, hey, we're waiting for the market to break this 31.41 level. We did touch 31.39, but we didn't break below it on Friday. We think we're definitely going to do that, possibly when the first half an hour of the trading session today, despite of the futures actually trading higher. Still expecting the mirror image of what took place in December 2017, January 2018 to be repeated shortly over the course of the next 3 to 5 weeks. Workday, that's another trade, guys. Workday is announcing earnings tomorrow. I am interested in buying. Workday puts ahead of earnings and after the earnings on the pop. Manage this trade wisely. Clearly, you don't want to be buying a ton of puts ahead of earnings. If you are taking this trade, understand that the trade could go entirely against you, okay? And it could still make sense to take the same trade after the stock pops at deflated prices. Now, based on what we have seen, okay, some of these stocks, they may not actually make the pop. That is why we want to own some contracts going into the earnings before these companies actually get to report earnings. The two common things CRM and Workday have in common, the cloud stocks have underperformed and the continuing signs of weakness in relation to many other sectors. With that said, check out Google. We're not just talking about the cloud sector, guys, which Google does a little bit of cloud business, not nowhere near compared to what Amazon or Microsoft do. But despite all these great stuff that Google has had going on for it lately, the chart points to another move lower, guys. Look at this triple top formation. The last time a couple of situations we had like this, the next move was lower here, the next move was lower here. We're expecting the next move in Google to be lower from here to protect yourself. I would certainly not go crazy out of money. In other words, I wouldn't buy in like 1250 puts or 1200 puts. Maybe go with the 13, 20, 30, 10 strikes and just be patient because that could be a highly lucrative trade right there, guys. Now, Amazon, I did not insert the slide there, but you know our stance on Amazon. We spent a lot of time covering Amazon in the last video. Just own Amazon puts because as retail numbers keep rolling in today and tomorrow, okay, Amazon could easily tank. Now, don't put your whole account in the Amazon trade. Clearly, what you want to do is to start buying some puts on Amazon in the expectation about a $50, $60 drop from here. It does look very weak pre-market, and the move lower at Amazon is very likely to continue over the course of the entire week. Yesterday, actually November 29th on a Friday, today is a Monday morning. So on Friday, we actually had a move 3, and move 3 characteristic, basically the market's opened lower. We expected to move 5, but it had characteristic of the move 5, but overall, it was just a smaller size move 3. The market didn't drop a whole lot, but they did open lower and finish lower. The move 5, basically, you see more of a sideways type action. So despite of the smaller volume stocks, there were really no buyers there, but there were really not a ton of sellers. So the magnitude of the move was not so great. We think that selling pressure that began on Friday, though, will intensify today and carry out through the rest of the week. So 2-day sequence is 1-3. Very rare sequence, doesn't happen very often, but here's your move 1, actually ends up being, if we're counting the aftermarket action, into an 11. We open with a gap lower and we finish lower for the day. You do not want to see this type of action if you are a bull. So all these guys adds up to a continued pressure lower in the markets here. So 41713 shows you that the market is reversing again into the bear momentum, and sometimes these bear momentums, they intensify rather quickly, and that is exactly what we need to take place and have a beautiful week this week. So as pointed out earlier on this 5-day sequence, this triple top move 11 top situation is a beautiful thing. It is very highly visible here and distinct, okay, and it just, after this gap was created right here, the market's been going here non-stop. We think that we can easily break this gap on the way lower and close this gap. So our real conservative target is this 3111 area in the next 48 hours. Now, next market move for today, guys, is 211. Basically, it's a reversal lower from wherever we end up opening. VIX. We've talked about the most crucial aspect on Friday that we paid close attention to is observing the VIX and to see if a positive trend, which has been institutional buying behavior every Friday for the month of November, if that will be broken. And indeed, that correlation did break. We officially got VIX spiking despite of it actually being half a day. Typically, you don't see VIX moving higher on half days, especially right around the holidays. So this move in VIX higher was notable. It started at 12.30. It finished at the highest level at 12.81, guys. So it is numerically lower, but it does make sense to increase your put positions. Specifically, what we pointed out in the last video was the fact that we're noticing this parallel slopes pointing to a trend reversal opportunity at TRO. And we said VIX likely to do this. That's exactly what we got on Friday, and also this bullish action in the VIX puts us at the time I'm recording this 1298, 1305 area. That is likely to continue throughout the day today and tomorrow. So the crucial observation did materialize, right? The question on Friday was, okay, is the VIX behavior going to create a TRO in the general market? And the certain condition we wanted to be met on Friday by Friday close was this situation right here. So if you take a look at the entire calendar, just focus on this. It's a very important point right here, guys. If you analyze every Friday for the month of November in this low, numerically low VIX, side trend in VIX overall for the entire month of November, every Friday you had institutional investors buying stocks in the expectation of a positive development over the weekend in China, but it hasn't taken place. But they kept staying with the strategy. What we're seeing, the strategy is reversion. So basically, when you look at the market move, you get a green move, a bull move, okay? And it should correspond to a negative VIX. In other words, market grinds higher, VIX drops. You get same reading on Friday the 8th. Green move, VIX lower. Green move, VIX lower. Green move, VIX lower. Here's the break of the trend and the TRO. Not only we are noticing it on the few charts that I've shown you, but now we got an official confirmation. For the first time, we're getting a red move and a green VIX. So when you combine all these things I've just shared with you guys, we're very nicely positioned for a substantial move lower this week. So congratulations, take action. Specifically, okay, expect this type of behavior to continue throughout the week. So what you want to do is anytime the market bounces intraday, you want to buy puts and you want to expect the market to go lower, collect some profits. When it bounces, basically lock some of the position again on the put side and ride it lower. The market is likely to keep doing this behavior through the rest of the week. Make sure you don't get scared out of the position if the market does this. Use this as opportunities to buy puts. So ideally, okay, Monday today around 10 a.m., you want to start buying puts. Expect maybe a drop at the open, followed by a bounce, followed by further drops. With that said, make it an awesome day. I'll catch you on the next trade tomorrow.